Hey guys, how's it going? This is mindfultrading.com. Hope everybody's enjoying their weekend. What we're going to do here, this is the first video on my new channel. What we're going to do here is I'm going to give a brief summary about myself just to tell you guys a little bit about me, and then we're going to look at some key events coming up this week, as this is the first trading week of the month, and we all know first trading week of the month, that always means that non-farm payrolls are going to be on that upcoming Friday, as non-farm payrolls are on the first Friday of every month, and that definitely has the potential to move the market. Now, this is a slower week historically. The week leading into 4th of July is always a slow week, and just in general, summer months, June, July, August, they're all a lot slower than most of the other months. December is kind of slower as well. So yeah, July in general is usually a pretty slow month. We did have some we have had here the past couple weeks some interesting volatility in the markets. We'll look at some charts and we'll talk more about that here. So yeah, so I'm just going to tell you guys a little bit about myself, and then we're going to start, going into analysis. And if there is anybody watching this live stream, feel free to ask any questions as well. So I do have a site. It's called mindfultrading.com. It's a very new site. There's not much content on it yet, but I did start a series where I gave people a decent outline on how to identify the overall trend, and I am currently still working on that, so that's a work in progress. So yeah, and that's our site, mindfultrading.com. About me, I am a professional part-time options trader. I've been trading options since 2012. I've been involved in the stock market since 2008. I currently work in corporate finance. My first year in finance out of college, I worked in equity sales and trading. And yeah, I studied business and finance in undergrad. I have, my bachelor's in business with concentration in finance, and I graduated summa cum laude at the top of my finance class. Okay, so the goal of mindful trading, this community that I'm trying to build, is that I really just want to build a community where we can all help each other learn and grow as traders. And I want to pass along my knowledge and just help people. I enjoy the process of teaching, mentoring. I love the process of self-improvement, self-development. I love reading. I'm all about all that good stuff. And eventually my goal is I'm going to start uploading shorter videos where I teach all the basic concepts of options. And then after I get all of that out of the way, we're teaching the basic concepts, I'm going to outline a nice little plan for people with smaller accounts and beginners. And I'm going to give a good amount of rules that I think people should follow to give themselves the highest probability of success. And yeah, and this everything that I'm doing here is, you don't just have to be trading options to learn from this, right? I do a lot of technical analysis, which can also apply to people trading stocks. But in my opinion, I think options are a very good tool to have in everybody's belt, and they're not as intimidating as you may think. And so my goal is to help everybody realize that they're not as intimidating as you may think, and that basically they give you the ability to maximize your profit potential on smaller amounts of capital, but also have to be careful because options are a lot more risky. Now, you can never lose more than what you put into them, but I wouldn't recommend that anybody goes out and trades options until they've educated themselves on all of the, the basic Greeks and just the stock market in general. I would say it's probably better to start off always just trading stocks, and then once you're comfortable enough with the market, you can start to slowly work your way into options. So before we look at charts, leading into every week, it's always very important to look at the economic calendar for the week. Just being aware of any key events that may have an adverse impact on the markets. So, as I said, we do have non-farm payrolls on Friday. which is something that always has a potential to move the markets. The non-farm payrolls, the jobs numbers here the past couple months have been weaker than expected, and in general, pretty much all economic data has kind of been slowing, which is one of the reasons why we've seen the market kind of slowing and not able to gain much ground here within the past month or two. The S&P's really been stuck at around 2440, 2450, and this 2420, 2440 range on the S&P is a very important range. We'll look at that here more. But yeah, so on Friday there is non-farm payrolls, first Friday of the month, and something else we'll be keeping an eye on here is Baker's rig count on Friday. Is also something that we need to be aware of because oil has been very volatile here. Recently it broke down below 45, made it all the way down towards 42. It has come back up here, back towards 45. And so that's kind of a good thing for the market to see oil kind of pick back up. But it'll be interesting to see if that strength can hold, or if oil makes another leg down. That's generally not good for the market. Market usually doesn't like to see oil selling off because that's bad for a lot of oil companies, and it's also bad for a lot of the banks that have lended to these oil companies that are having trouble making money with oil at these levels. If you're newer to the market, oil, only about 2 years ago, oil was over $100 a barrel, okay? And not only did it split in half, but it split in half more than splitting in half, right? If that makes sense. Basically, it went down more than 50%. It went down around 60%. So yeah, it went from basically over $100 a barrel to now it's at 45. And my opinion on that is that not both shoes have dropped with that. There are still companies that are trying to survive with oil at these prices, hoping that oil can creep higher and help them gain back profitability. But if oil stays down at these levels, I think that there's going to be more pain felt by these smaller type oil companies that are extremely levered. And when I say extremely levered, what I mean is they have a lot of debt, okay? So yeah, and we do have James Bullard. He's a member of the Fed. He's speaking on Monday, which is tomorrow. But yeah, generally this is a slower week, although the 4th of July week is usually not much happens in the market, but data-wise, there is a decent amount of data this week. Also, another Fed member speaking on Thursday, John C. Williams. So yeah, I always look at that. Now, Friday, the first Friday of every month, like I said, is always the most, routine, important day to be aware of, where, the jobs report non-farm payrolls. So yeah, that's what we have coming up this week. Now we're going to look at charts to see how many people. Okay, so there's one person watching, which is fine. If you have any questions, feel free to ask in the chat. I don't see anyone though, which is fine. Okay, so I'm going to look at the S&P 500. So this is another thing. Whenever I'm doing my analysis on the stock market, I always start by looking at the indexes. Okay, it's very important to start your analysis by looking at the indexes and then work your way down to individual stocks. So my analysis always starts with the S&P 500. And every day I'm always watching the S&P futures to kind of gauge what I think is going on in the market. Okay. Now on this chart, all I have here is the 3 moving averages and just price. Okay. So the red line is the 200 simple moving average. The blue line is the 50 simple moving average. And the pink line is the 17-day exponential moving average. And this is a weekly chart of the S&P 500. So, last week's price action was pretty bearish. We did close below the previous week's low. And we are, however, still holding this key 2420 level. Okay, 2420 on the S&P is a pretty important level. If we can't hold that, I would expect us to go back down and test 2400. And to the upside, 2450 is important as well. I would really say the 2420, 2440 range in the S&P is a very important range. Whichever way we break that range, we should move further in either of those directions. So yeah, at the end of every week, I like to look at weekly candles to begin with, and then I'll go back into the daily candlesticks. Hello, Panda. All right, here we go. So as we can see here, the S&P last week did come down and test the 50 SMA, okay? Now, if the S&P can't hold 2420, the next important level to watch is going to be this 50 SMA, which is 2410, and then of course 2400 is another important level. So yeah, what it looks like to me is if we're unable to hold 2420 in the S&P, we're probably going to come down and test 2400. That's my opinion of it. And yeah, I mean, we've just been chopping, right, between 2420 2440 here for all of June pretty much, right? We've been in this tight range. Now, we did have a couple day decent move down, and then a bounce. That bounce that we had, this was, I believe, Wednesday, right? 628. Yeah. So we had that bounce on Wednesday, which looked kind of bullish. We gapped up, but then the next day we came right back down and sold off, and we ended up closing below that day's low. Now, we were able to hold 2420 on Friday, but really, I would say the important level to be aware of is the low on this candle here, which is Thursday's candle, and that's going to be 2405. Okay, I would say if we can't close above 2420, it's likely we're going to come down and test the low of this candle at the least, and probably more likely we test 2400 over here, right here. Okay, so now that's kind of the short-term outlook, but if you back this up, right, what I always say, especially the newer people, is it's very important to identify the longer-term trend before anything. And one of the easiest, best ways to do that is to use the 50 and 200 simple moving averages and just look at how they are, okay? So on this chart, the 50 SMA is the blue and the 200 SMA is the red, okay? What we saw here on around April 22nd, there was a bullish cross, right? So the blue crossed above the red. That's a bullish cross. Now what we have is we have the 50 SMA is way above the 200 SMA, and there's a very large gap between the two. When there's a large gap like this between the two, that signifies strength in the trend, okay? We're still in a bull market. We're in a bull trend, with the categorized by the 50 being above the 200, okay, and being very far above the 200 actually, because the 50 is 2410, the 200 is 2293, right? Now we did come back down and test the 50, okay, and it remains to be seen whether or not this level will be held. If we can't hold the 50, then things will start to get a little bit more bearish shorter term. But right now, we do need to recognize that we're in a bull market still, okay, with the trend being pretty strong, as evidenced by the 50 being very far above the 200. But the month of June has been choppy, which makes sense because economic data is slowing down. And you know, this whole rally that we had was based on the hope of tax reform and regulations being eased, and it's doubtful whether or not that's going to happen. Okay, at best it's doubtful. So yeah, I mean, that's that. As we can see, you know, the 17 EMA, when price is above the 17 EMA, that's this pink line. To me, that's a sign of short-term strength. Okay, so with price being at or below the 17 EMA, yeah, short-term we're weak, or we're not extremely weak short-term. I would say short-term we're not bullish. Okay, my opinion is shorter-term, it's likely that we're gonna see more weakness. I think we're gonna come back down and eventually test 2400, and that's gonna be the level that we need to see whether or not we're gonna hold that level. Okay, so yeah, I always, like I said, start my analysis with the S&P. Now, the other indexes that I think are important to look at is the QQQ, which is the NASDAQ 100. And the QQQ has really been the leader of the trend higher, and it's really been stronger. But recently we had that very sharp sell-off, and it hasn't been able to bounce back. And actually, it closed below the 50 SMA on Friday, which is bearish, okay? Now, obviously, we can see, you know, we are in a bull market uptrend, 50 SMA way above the 200. But shorter term, we are, okay, this is shorter term bearish, right? If price is below the 50 SMA, that's short to medium term bearish. It's likely that we can get more weakness, and the levels we need to be watching here is the low on this candle for a QQQ, which is 136.25, and then 139 to the upside on the 50 SMA. And if the 17 EMA actually crosses below the 50 SMA, that's called a bearish cross, and that's even more bearish, right? But basically, what this looks like to me is this looks like we just made a leg down, we made a lower high, and we made a lower low. So it's possible here that we're going to see more weakness. And yeah, I mean, the next, I think 135 is probably the next interesting level on the QQQ. So yeah, I mean, this chart, it's clearly this chart, there's weakness in this chart, and it's breaking down, okay, as evidenced by being below the 50 SMA. So yeah, we need to be aware of 139 and the low on this candle. I'd say the close ranges. So basically 136, 139. That's pretty important range on the QQQ. See if anybody has any questions. All right, don't see any questions, so I'm just going to go through my analysis and see if anyone has any questions towards the end of this video. So as we can see, QQQ, which is big tech, okay, QQQ is the NASDAQ 100 ETF. Big tech actually led the rally higher. Now it's breaking down, okay, and it's below the 50 SMA. That's medium term, short term bearish. So small caps, also important to always keep in mind and be aware of the key levels on that, which is the IWM. And small caps are actually holding up a lot better than tech. So it's possible here that we're getting some rotation out of tech and into some other sectors. As we can see, small caps are holding up a lot better, right? Much further above the 50 SMA. And even above the 17 EMA. And, you know, if IWM can break 142, it can definitely break out, get going, and start trending again. Okay? And so, you know, this is a decent sign when, even though there's some mixed signals here with big tech being below the 50 SMA, the S&P and small caps look a lot better. Okay, they look a lot better. S&P and small caps are both still well above the 50 SMA. And so yeah, I mean that's that. Now we did have some big rotation into biotech here a couple weeks ago, and as soon as the market started getting weaker, that started to unwind pretty fast and unravel pretty fast. But, you know, this was a pretty significant move here that we had, and that was some pretty substantial rotation. As long as the IBB can hold this 305 level, that's a good sign. So for me, the sector that I feel the most bullish about is, I would say, biotech at this point. Still, even though it's been weaker here, I still think biotech is looking like there's some rotation into biotech, okay? As we can see, we actually just recently got the bullish cross 17 EMA above the 50 SMA, and as well as the 50 SMA above the 200 SMA. So clearly here, biotech has started to break out, even though, you know, there has been some shorter term weakness. It has started to break out, okay? So yeah, like I said, I like to look at all the sectors. So biotech, let's see here. Yeah, financials, XLF. So financials are also looking a lot stronger and potentially more attractive. I'd like to see XLF get back above 25 and hold that 25 level. But same thing here, you know, there was some rotation here the past couple of weeks into financials, okay, in XLF. XBI is the other biotech ETF. Same idea with that. Okay, this ETF has looked even better here, that big pop. I've also been watching retail, okay, because retail's been very weak. That's XRT. And, you know, retail has broken down, but there are some select names that I do like. And we'll look at that. More specifically, I like Under Armour. Okay, Under Armour's chart looks like it's definitely started basing and breaking out. So yeah, we'll take a look at that. Let's see if I can... Any other sectors that we should look at? These are really, you know, the kind of more eventful sectors here. The other ones aren't as interesting to me right now. Basically, what I've seen here the past couple of weeks is there's clearly been rotation into biotech and out of big tech. Okay, as we saw, the QQQ got really weak, right? There was some decent rotation into biotech and financials. So yeah. So if I would say anything about my outlook this week on the market is, I wouldn't expect much to happen this week. It's going to be a slow week. Okay, there's not a lot of participation, lower volume. A lot of people are on vacation. You know, it's 4th of July week. A lot of institutional traders and the bigger money isn't really active at this point. So I wouldn't expect any type of really big drop in the market this week. You know, with that being said, it's always possible that that could happen. But I think it's less likely that any significant stuff happens this week. But we do need to be aware that the price action here this past week was pretty bearish, and just we have to be on the S&P. We need to be watching 2420, and if we can't hold that, we're probably going to be testing 2400. So yeah, I mean, that's what we should be paying attention to here on the S&P, is we should be looking at this 2420, 2440 range, which we've been in a lot of in June. And if we can't hold 2420, we're probably going to go down to 2410, which is the 50, and then eventually test 2400. Now, last week, the big thing that happened last week was bonds sold off very hard, okay? The 10-year went up to 2.3, and it was down all the way to 2.12, so 18 basis points in 1 week. Usually when rates are going higher, that's a better sign for the market. Okay, TLT is a 20-plus year Treasury ETF. So you see here, TLT has really started to rally, and rates started to really go lower, and that's bearish mostly. Okay, when the TLT is rallying, that's that's bearish, right? That means rates are going lower. That's not good for the stock market. But last week there was a huge sell-off in bonds, and rates spiked higher. Okay, now that's more bullish. When I see the 10-year going up all the way to 2.3, I'm kind of leaning more bullish, right? And gold's kind of been holding its ground. Okay, it hasn't been rallying, so there's not a ton of fear in the market at this point. The VIX, still below 11, although it did go up a little bit. Still below 11, and so that's something that we're going to keep an eye on here, is how far is the TLT going to sell off, how much higher are longer term rates going to go, because that's a pretty significant move in 1 week for the 10-year to go from 2.12 to 2.3, and that's usually bullish when rates are going higher. So a lot of people say look at the bond market. A lot of people say the bond market is really the thing to pay the most attention to give you the idea of whether or not you should be bullish or bearish equities or stocks. And what the bond market was indicating to me last week was that even though there was some weakness in the market, I wasn't as worried because bonds were still selling off and rates were going higher. So that's something that we definitely need to pay attention to as well. If we see rates start going back down and TLT starts rallying again, okay, then things start to become more bearish as well. But what we saw last week is we saw money coming out of everything, okay? We saw money coming out of the stock market. We also saw money coming out of bonds. So usually that's something that doesn't happen as often. If you see money coming out of stocks, usually there is money going into bonds, but just money came out of everywhere. So kind of mixed signals, right? Because bonds being sold should usually be seen as bullish, but the stock market was also being sold. So rates going higher. So yeah, I mean, that's something definitely to be aware of and keep an eye on for sure, is the 10-year and rates. So some stocks here that I like the charts on. I do like the chart of Wynn. Okay, as we saw, it's just recently began basing and breaking out. So I do like the chart of Wynn. Okay, we saw 50 cross above the 200 here a couple earlier this year, the bullish cross. Okay, on the 50 and the 200, and this is really could be a decent entry point. Wynn reports earnings in the third week of this month, I believe, and last quarter was really Wynn's first really good earnings report that they've had in a while. And what's going on with the gaming industry and the gambling industry, it's referred to as the gaming industry and casino stocks, is gambling is now picking up again in China. So that's why, a lot of these companies are starting to do better now. Okay, and that trend has just started. The trend with gambling starting to accelerate in Asia has just began. Okay, there's still a lot of room to run, in my opinion, in this sector, because that trend just started to emerge again, where gambling growth has just started to pick up, where it was declining for a long period of time. Okay, and now it's growing again. So yeah, definitely Wynn is probably my favorite idea longer term. Okay, and I just put a disclaimer in this video. I'm definitely not an investment advisor. Okay, this video is made for educational purposes only, and anything I say about stocks, I can't be held accountable for any of this. Okay, this is all educational. I'm not telling you guys to go out and make any trade. I'm just telling you, based off the chart and based off the fundamentals of the companies, the ideas that I like more. Okay, and that it's not investment advice. Okay, if you're seeking financial help, financial advice, you should seek a financial advisor. So the goal of my content is just to be educational and, give examples of charts that I think look bullish or bearish, examples of both. Now, clearly to me, Wynn here, this is a beautiful chart, okay? Now, Wynn crashed, okay? Gaming revenue is exploding up here, and then it just absolutely collapsed all the way down to here. And now, as you can see, we based, made that first leg, based, boom, okay, broke out. This chart to me is bullish. So yeah, I mean, this is one of my favorite bullish charts is Wynn. Now, Under Armour as well. Retail has also been very weak for a long period of time, but Under Armour recently, Under Armour's been basing, and it recently finally broke back above that 20 level. That 20 level is a pretty key level. Same idea with this chart. We've kind of been basing, broke above 20, still holding 20. The 17 EMA crossed above the 50 SMA. Price finally got back above the 50 SMA, and it looks to be holding. Okay, so this is another chart that I think, to me, looks bullish and looks like it has room to run. Now, I said that biotech really, there was some money flowing into biotech, and Regeneron definitely exploded higher with that. Now, it has come down considerably since that explosion, but as long as it can hold 480, it looks like it can still head higher. Now, Regeneron just recently, very recently, had a bullish cross with their 50 SMA crossed above the 200, and it has started rallying, okay? This is another example of a chart that looks bullish and attractive shorter term, assuming that the market doesn't break down and start selling off. Now, I'm giving examples of a lot of bullish patterns, but that doesn't mean that this is the time to be putting on a lot of bullish trades, okay? And that's because the S&P's kind of been stuck, and last week was not the most bullish week in my opinion. Okay, price action was kind of weird last week. Like I said, everything was selling off, right? Bonds and stocks were both selling off. So these are bullish charts, but they could very quickly turn around and not be as bullish anymore, okay? And so, yeah, do I like these if the market continues higher? Yes, I do. I like Regeneron. I like Wynn. I like biotech. I like Under Armour. Now, let's go on the other side of the coin and look at stocks that I like if the market sells off. Tesla is definitely one of my favorite candidates to ride the market lower in sell-offs. Okay, and Tesla has recently just started to break down. Okay, below the 17 EMA, and has a lot of room to go before it gets to the 50 SMA. Right, a lot of room. Okay, so this 360 level, if Tesla can't hold 360, I would expect it to come back down to at least 350, maybe even below 350. Okay, so if the market does continue to sell off, I think Tesla is one of the best candidates to ride lower with puts. Now, obviously, the chart has been crazy here, parabolic. 50 SMA cross above 200, it's a bullish cross, okay? But if we do get a sell-off, Tesla is a great candidate always to ride lower. Now, the best thing to do as a trader, and more specifically if you're a swing trader, is whenever you get candles where price closes above or below the previous day's high or low, there's usually going to be some follow through. Okay, so let's look at an example here. Here's an example right here. This candle here is a small little candle, right? Made a high of 387, a low of 379. This candle here, we closed below the previous day's low. Okay, we closed here at 377. The previous day's low was 379. So when you get a candle where you close below the previous day's low, there's usually a high probability that there will be at least follow through the next day. Okay, if you close below the previous day's low. And as we saw here, we closed below the previous day's low again 2 days in a row. And then we bounced a little bit, and then we closed below the previous day's low again, and then came back down. So it looks to me like Tesla definitely, if we get a sell-off, Tesla wants to head lower. Okay, and 354 is the important level on Tesla to watch, the low of this candle. It looks like it wants to come back down below there and test eventually 350, in my opinion. So Tesla's a good candidate to ride the market lower if we do get a sell-off. As well as Netflix. Netflix, same idea. Okay, Netflix chart has even been weaker. Netflix chart looks similar to the QQQ because it does make up a large percentage of the QQQ. Okay, it's one of the biggest holdings in the QQQ. So Netflix also looking more bearish, a decent candidate to ride down. And another one, Nvidia. Man, this thing, you know what I love? I love when I see people talking, whenever I like see in, what's the word I'm looking for? A surprising, I guess, unordinary, inordinary. I'll just go with surprising. Whenever I see a surprising amount of people talking bullishly about a stock, that says to me that you know, the time's almost up, and that's kind of what's happening with Nvidia. I've seen this stock everywhere. People talking about it everywhere. Facebook, CNBC. You know, everyone's talking about how bullish they are on Nvidia, and as soon as that started happening, what happened to this stock is it started rolling over. Okay, and I think it's another good candidate to ride lower because it's just way overbought. And if we continue weakness, this stock, there's going to be money coming out of this stock for sure. So yeah. And then, you know, the other thing is oil. Okay, oil's been weak. My favorite stock to be bearish on with oil is Hess. Okay. Now, the good thing is it's had a bounce because oil's been bouncing here recently. Hess has had a bounce. I like Hess. If Hess can come back up towards 46, I really, really like it as a bearish, you know, as a bearish play, kind of as at least as some type of a portfolio hedge. But this right here is like a textbook bearish head and shoulders. See, this is the head, this is the shoulder, this is the shoulder, and it broke that shoulder line, right? It broke that neckline at 46, and it made it all the way down to 40. Okay, and now it's bouncing. So it went from 46 to 40, and it's kind of right in the middle of that retracement here at almost 44. So I'd like to see it come back up, test 46. If it can do that, I think it's a decent place to look to get a little bit bearish on it. All right, and let's see if we can get a chart of oil, because oil, trying to get oil futures here. Don't know what it is on Thinkorswim. There we go, CL. Okay, so yeah, so as I said, you know, oil broke down, came back down to 42, and then has really rallied since. I don't like all this stuff here on this chart. Too much noise. Okay. So yeah, I mean, oil has clearly started a downtrend again. Okay, we just recently had a bearish cross, right, where the 50 SMA crossed below the 200 SMA. That's, you know, they call that, you know, the death cross, whatever. That's a bearish cross. Okay, that's something definitely to be aware of. Now it looks like oil may want to come back up and test the 50 SMA at 47. But here's the thing, with oil rallying like this last week and rates moving higher last week, that to me is still more bullish, okay? And overall, we are still in a bull market, okay? The trend of the market is clearly up. If you look at every index, the 50 SMA is well above the 200 SMA. So we are in a bull market, okay? And last week, seeing oil rally, seeing rates move higher, those are good things for the market. So I would say that I'm slightly bullish, you know, but that could change very quick if the market gets a little bit weaker. So yeah, I mean, those are some of the things that I'm looking at. And let's see if anybody has any questions. If not, we will end this session. So yeah, Panda. If the markets sell off everything, the IBB will tank too. We even saw that last week where a lot of money rotated in, but as the market started to sell off, the IBB and biotech started selling off hard, like very hard there for a couple days. So yeah, it will definitely drag that down with it. And let's see. Hold on 1 second. All right, so Panda also asks, at which point would you know the QQQ is definitely most probably going to head to a lower level? I see there was previous times it closed below the 50 SMA but then rebounded. Yeah, the 50 SMA is definitely a very kind of magnetic type of level. QQQ, I would say, I mean, it's been really volatile. I would say to use the low on this candle here. But at that point, you know, that's a pretty far move down already. But yeah, I would have to say you'd have to use the level here, 136.25. If it closes below there, then it's likely going to head lower, and then 139 to the upside, right? So I mean, I would be watching 136, 139 range on QQQ. Whichever way it goes, it can likely continue in either of those directions. So yeah, but if you're gonna get bearish and you're looking to short or get puts in something, I think that Tesla and Netflix are probably good candidates instead of just the QQQ. You know, QQQ is not going to move. It will, in a sell-off, it will move down a decent amount, but it's not going to move down as much as Tesla or Netflix. And so yeah, but I would be watching the low of Thursday's candle on pretty much everything. The low of Thursday's candle is an important level, which it's probably not very likely we go below the low of Thursday's candle this week, because this is it's a very slow week this week, and Tuesday is not even a trading day. So there's not going to be I don't expect there to be a lot of movement, but that's what I would be watching. The low of Thursday's candle on everything. If we let's say tomorrow we sell off, we end up closing tomorrow below the low of Thursday, then it's a good time to get more bearish, in my opinion. Hope that helps. You have any other questions, Panda? Before I stop this stream. All right. Don't see any questions, but if you have any other questions, feel free to reach out. My email here, I did put it here, mindfultrading@gmail.com. All right. It's my goal to create a community of mindful traders and continue to build myself, build mindfulness in myself, improve myself, read books. You know, my goal is always to read a book a month. I'm on my 8th book this year, so I'm on pace. I actually want to pick that pace up, though. I want to read more and actually do more. But I recently found this awesome podcast, too. It's called Chat with Traders. I don't know if any of you guys have ever heard of it, but I highly recommend listening to that. That's awesome. It should definitely be educational for everybody. Some ones are better than others, but there's a lot of them already. So that's an awesome podcast. Probably my favorite podcast. It's called Chat with Traders. Yeah, so the pickup in the gaming industry, it is indicative that China, you know, Macau, so all these casino companies, they make about 70 to 80% of their revenue in Macau. Okay, Macau is like a little island off the mainland of China, and basically, I guess you could argue that's indicative that economic activity is getting better in China, in Macau. But really, what's going on here, the trend is that gambling revenue, it's called gross GGR. It's called GGR. I believe it stands for gross gaming revenue. Gross gaming revenue has started trending higher and started to grow again. Okay, and that's why everything's reversed. And Wynn is by far my favorite, 2 to 3 month play. I still like Wynn here. I think Wynn has potential to continue higher. And I think Wynn has also potential to have a good earnings report and go higher from here. It could, after its earnings report, it could easily make it to like 160, maybe 155, 160. Yeah, no problem, Panda. No problem at all. I'm going to start making a lot of content on this channel and trying to build stuff out. So yeah, and you guys have my email. You have my email. Feel free to reach out there. So yeah, enjoy the rest of your night, and I will be in touch with everybody.